Rakesh Jhunjhunwala is popularly known as India's Warren Buffett and he is one of the country's successful investors. He also goes by the nickname the Big Bull. The chartered accountant and the trader is on Forbes' rich list. He also the chairman of Aptech. The Dalal Street Biggie started trading in the stock market back in 1985 with a capital of 5,000 that had grown to 11,000 crores by 2018. As per Forbes, his net worth is of $5 billion. He also runs a privately owned trading firm apart from investing in the some well-known firms. Rakesh Jhunjhunwala was born to a middle-class family in Mumbai on July 5th, 1960. His father was an income tax officer who also invested in the stock market. Growing up in an environment where share market discussions were regular, young Rakesh got attracted to trading at an early age. When he told his father about his aspiration, his father asked him to complete his education first. So he went ahead to graduate from college and later become a qualified chartered accountant. When he entered the stock market in the mid-80s, BSE was only 150 points. Currently, BSE is trading over 51,000 points. He made it first big profit with Tata Tea. He sold 5,000 shares of Tata Tea in 1986 for Rs 143, which he bought at Rs 43. His personal life and education. He got married to Rakesh Jhunjhunwala in 1987 and has 3 children from the marriage including twins. His wife gave birth to their daughter Nishtha in 2004. His twin sons Aryam and Aryaveer were born in 2009. His wife is also an investor in the stock market. His stock market success. To the uninitiated, stock trading sounds complicated, but not to Rakesh Jhunjhunwala. It occurs to him naturally. Between 1986 to 1989, he made Rs 2 to 2.5 million in trading stocks of Sisa Goa, now Vedanta. One of the best stocks in his portfolio is Titan. He bought those shares in 2002 at the price of 3 rupees a piece. He is the wealthiest investor in India just because of this company. It makes him a crore a day. He once famously said, "Markets are like women, always commanding, mysterious, unpredictable and volatile." He believes that his ability to invest in the right asset at the right time had been critical for his success. My decision to aggressively invest in the asset class of Indian equities at the right time was very important determinant of my success. Rakesh has featured in the Forbes several times. Many companies has given him many names. A successful investor and an entrepreneur, Rakesh Jhunjhunwala has invested in several businesses. He has an asset management company named Rare Enterprise. Jhunjhunwala is also a member of the board of many Indian companies. Important investment lessons from Rakesh Jhunjhunwala. Number 1. Investing should be a topic you feel strongly about. He suggests that people who want to develop a passion for learning about the stock market should research by reading and talking with others who are in the business of investing. He believes that you will never develop a passion for learning if you rely on others for stock market tips and suggestions. Rakesh Jhunjhunwala's passion for the stock market started when he was a young boy. He used to ask his father how the stock market works and was fascinated with how price fluctuates every day. As an adult, his passion for investing led him to make smart decisions and stay motivated despite the initial failures. He still enjoys attending quarterly meetings of companies that he invests in. He asks questions of the management and gives them honest feedback. He does so not because he has to, but out of the strong desire to see his investment bring a profit. Number 2. Patience is a virtue. To be successful as an investor, you need to understand that investing is a long-term proposition. You need to be aware that it will take a decade or more to see the results of your investments. Rakesh Jhunjhunwala is a long-term investor. He has immense patience with his stocks and is known to hold on to them for years. He has been investing in Titan Company Limited for over 2 decades now and has made over 1000% returns on his initial investment in this stock. He says he invests in a company's business, not its stock. And most importantly, doesn't sell shares even during stock market corrections. He has seen so many cycles in the stock market that he doesn't get worried by the short-term drops. It is important to understand that a company's fundamentals drive its stock price in the long term. In most cases, the stock price reflects the growth potential of the company over the next 5 to 7 years. If you are buying for a year or two, it's just pure speculation. It doesn't mean that you should not buy any stock and hold it for 7 years. You have to understand the company's growth potential and future business prospects. Lesson number 3. Make the most of the opportunities you see. One of the most important lessons from Rakesh Jhunjhunwala is that an investor should be ready to grab an opportunity. The famous investor believes that the opportunities are created through the ups and downs of the market. His example is the 2008 global financial crisis, where he purchased stocks at a discount while they were undervalued in the market. In doing so, he says, investors must be aware of the risk tolerance levels and never be afraid to make losses. This is because according to him, one will never make money if they are afraid to lose it. Stock market success depends upon your character and temperament rather than on any other factors. You should not get excited and depressed by the ups and downs in the stock prices. Number 4. Invest in a stock before it becomes popular. Rakesh Jhunjhunwala says he's not the kind of person who would like to be part of the crowd. It's just his nature. Probably it's in his genes or something. If you look at his track record over 3 years, he has been right most of the time and wrong sometimes too. But his big wins have always come from buying unpopular stocks. He says it's always better to buy into a company's story when nobody is talking about it. If you believe that the company has got great potential, no matter what its current performance, you should try to find out how it has performed over the last 2 or 3 years and what are its purpose. Thank you so much for watching this video. See you in the next video.